Let's get to the management of Godrej Agrovet. It was not the best quarter for the company due to contraction in the margins over the previous year. Yash Upadhyay spoke to Balram, Singh, Yadav, the MD of the company, and began by asking him about the factors weighing in on the margins. Listen in.
The quarter has been very weak, largely because of our animal protein businesses. That is because of our milk as well as the animal feed business, where the margin has contracted. This has been because of a huge write-off we have taken on the butter prices being very low in our milk business, and in the animal feed business the raw material prices were at the peak. Animal protein prices were not very good, so the pass-through of cost had not happened fully. Moreover, as a strategy, we are going in for very rapid volume growth in animal feed rather than a very high profit, and a little bit of sacrifice of margin has happened to get more volume growth. One thing I need to tell you is that in animal feed business, scale determines cost leadership. And we are wanting a few more quarters of upwards of 20% growth, wherein we start pushing the margin in a big way after that.
So coming on to your aqua feed business, over the last couple of quarters we've seen that it has been hit by lower product prices and higher raw material costs. How are you seeing that panning out?
So in aqua feed we have two segments. One is fish segment, where we are doing very well. The growth is also there, but it is not the most profitable segment in aqua feed. The most profitable segment in aqua feed is shrimp feed, and I must acknowledge that we are not a very big player in shrimp feed, although we were very profitable. But unfortunately the profitability has been very badly hit by very high raw material cost and very low shrimp prices, which did not allow us to increase the prices. However, in most of the animal protein businesses, the bad times are almost over. The raw material prices have started coming down, and the output prices have also started looking up. So I believe in next coming quarters you will see a growth in top line as well as a significant improvement in margin also.
Well, that's good news, sir. But another good news is coming from your subsidiary Aztec Life Sciences, which also reported a good set of numbers. Can you share some color as to what's aided the strong performance in the quarter gone by?
Three reasons. One was we commissioned a backward integration plant. We invested close to about 50 crore rupees because a year and a half ago we realized that China may not be reliable source of raw materials and may not be the cheapest source of raw materials also for agrochemicals. And that came true, but the whole industry was affected because of high raw material prices from China, but we were a little less affected because we had started this backward integration plant where we synthesized our own raw materials for certain of our products. The second uptick is because of very good traction in the export market, and third is we have definitely gained from rupee depreciation also.
Okay, and sir, a word on your dairy business. That has been a laggard amongst the various other sectors that you cater in. How do you plan on improving this, and what is the growth outlook going forward?
So dairy business performance has been masked because of this low prices of butter, because we were left with lot of butter because of the glut in October to March last year, which we had to dispose of at very low prices. If you remove that, we are very glad by what we have done. There have been improvement in the value-added product salience in our total sale. We have launched several value-added products like thick shakes, extruded ice creams, as well as flavored milk. These products will definitely add to profitability in future, and that is what is our future game plan also, to push our salience of value-added products from current 20% to 40% in next 3 years. Once this happens, there will be a lot of stability in profitability of that business.
Right. Sir, your poultry business, there you operate through a joint venture. Any plans on increasing the stake in the company?
Yeah, we are already at 49.9%. We have an agreement with our partner Tyson that we will get to 51% eventually, and most probably in this quarter we are expecting that we will get to controlling stake of 51% in this joint venture.
So that is the end of the ongoing quarter, that is the third quarter.
Yeah, third quarter.
Okay. And sir, in the past, as we've seen with Godrej Agrovet, there have been many instances of acquisition and growth through the inorganic route. Is there anything domestically or internationally that you like and that you target in FY19?
Yeah, in most of our businesses, we are open to inorganic growth, and as and when opportunities come, we evaluate. And we have the financial capability also to do that, because our debt equity is very low at about 0.16%, considering this is the peak season for us where the working capital is the highest. So we have wherewithal to go for inorganic growth. The only thing is that good opportunities should come, but we are more than willing to explore M&A in several of our businesses.